Today we're going to be looking at BlockFi. A lot of YouTubers are promoting this and I see ads everywhere and I didn't know anything about it and I was skeptical. So I'm just going to share the research I found in this video and hopefully that's helpful for you. We'll go over the pros and cons, the risks, my overall experience with BlockFi the last 4 or 5 months, and hopefully this is helpful for you. This is not financial advice, this is just what I do, and this will be a detailed video, so let's just get right into it. So first, what is BlockFi? Well, it's a centralized company. It's based in the USA, but their interest account is available in most countries worldwide. At the time of this video, they've never lost users' funds since being founded in 2017. They've been backed by some pretty big names. They seem to be pretty well regulated, and they have a few main products like a credit card, crypto-backed loans, a trading account, and the main thing we're going to be looking at is their famous interest account that lets you put your crypto to work. With the interest account, you just deposit your coins. For example, deposit some Bitcoin, and on day one, you start earning interest, which is anywhere from 4 to 9% per year, depending on the coin. And what's cool is you can withdraw it. It's not locked up in a contract, and once per month, that interest is paid and deposited into your account automatically. So the idea of this is really cool because traditional bank accounts offer 0.2 interest, whatever it is, it's a joke. But we know these banks are lending out our money and making money off our money. And then companies like BlockFi are coming in and trying to change the game. They're sharing those interest rates with us. That's what we're going to talk about today. And there's obviously some risk, which we're going to look at. And that's the general overview of BlockFi. Now, if you don't want to watch the whole video, here's the conclusion that I came to. I like using BlockFi for a small percentage of my portfolio. Now, the main risk at the end of the day is BlockFi is a centralized company. So they're the ones holding your crypto. They can shut down your account, lock you out, not let you withdraw, all the risks of having a centralized company. Now, that's basically the main risks. The counter to that is they're a well-funded company and they're backed by some very big names and investors, and that's what made me comfortable with them. So basically, you just have to juggle this risk reward. One side, it's centralized. On the other side, you could be earning passive income on your crypto. You kind of just have to balance those and figure out if it's worth it for you. If you should use BlockFi, well, that really depends on your risk tolerance. It's going to be 0% for some people that won't use it at all. That's fine. Some people like me will put a little bit of crypto in there, and I don't think anyone would advise putting 100% of your crypto in BlockFi. That's just very risky in my opinion. So now let's cover how does BlockFi pay such high interest in the first place. These rates can vary from 4% to 9% at the time of this video, which is way higher than traditional banks. So what's the deal? So let's go straight to the source. On their website, it says BlockFi generates its interest by lending out your assets to trusted institutional and corporate borrowers. So they're lending out your funds to corporations and institutions, and they're sharing that interest rate with us essentially. It goes on to say to ensure loan performance, BlockFi typically lends crypto on over-collateralized terms. So this is important. By over-collateralized, it means to borrow the money, you have to put up collateral that's worth more than the loan. So let's say a company wants to borrow 10 grand, they have to put up 15 grand of Bitcoin as collateral to borrow that money. Whatever the numbers are, it's something like that. So in theory, this is good because it lowers the risks. Companies aren't going to take out risky loans because they have collateral. They don't want to lose that. And they're also incentivized to pay back the loans. So that's kind of BlockFi's strategy of mitigating risk. And lastly, it says BlockFi implements very thoughtful risk management practices and technology to mitigate the risk. They have systems in place. Let's say the collateral drops in value. They're going to send the borrower a margin call like, hey, you need to put in more money because the collateral isn't worth enough right now. So stuff like that. So overall, BlockFi pays us interest because they're loaning out this money to quote unquote trusted corporations and institutions, and that's how they pay us in this interest account. And BlockFi manages this risk by doing 24/7 monitoring, over collateralizing the loans, sending margin calls, things like that. So that's kind of on a higher level what they're doing. So that's what they say. What are the risks with this? What are the things that they're not really saying? So let's go down the list. The first obvious risk with BlockFi is it's a centralized company. Once you take your crypto out of a hardware wallet and you put it into BlockFi, you're no longer in control. They can lock your account, disable withdrawals, whatever. There's nothing you can do. They own your crypto at that point. So this is the risk with any centralized company, whether it's BlockFi or an exchange like Coinbase, Binance, whatever. There is that risk of having a centralized company. The second risk is your funds aren't insured. If your money is gone for whatever reason, it's not insured like it might be sometimes in a traditional bank account. 3, there's bankruptcy risk. This relates to BlockFi being centralized, but if BlockFi goes bankrupt, goes under, maybe there's some disaster scenario, this could potentially cause the whole ship to sink. So for example, let's say they weren't doing over-collateralized loans as they promised, and they were kind of extending themselves, taking on too much risk, and on top of that, some extreme market crash happens, that could cause them to go under, which would be a potential scenario. Next is cyber attacks. So exchanges and platforms like BlockFi, they just have big targets on their back. So they're just targeted by hackers more. That's probably one of the bigger risks. This happens a lot in crypto. And in my research, it did show that BlockFi had a hack in 2020. The hacker got access by getting into an employee's phone via SIM swap. So that's scary stuff. But the good news is it looks like there wasn't any damage done and no funds were lost, which is like the important part. And despite that, that, BlockFi has never lost users' funds since being founded in 2017. So cyber attacks, always a risk in crypto in general. The next risk is disappearing. So BlockFi could, in theory, just disappear, run with your money, who knows? Now they are regulated in the States, and I'd say it's becoming more unlikely that that's a possibility, but it is crypto and crazy stuff happens. We're just looking at all the risks here. Another risk is extreme market conditions. So BlockFi is loaning out this money. That's how they're able to pay interest to us. Let's say the market has an insane crash and BlockFi had too much risk and they just go under. Kind of like the bankruptcy situation I touched on. This is another angle you have to look at. Like, how robust is BlockFi? How trustworthy is their team? That's what we kind of have to look at. And lastly, I want to just add maybe their transparency is a risk. We don't know 100% behind the scenes what's going on in this company. We don't know exactly who they're loaning money to. They say that it's trusted corporations, but what does trusted mean? How does a corporation qualify for that? And how do we know all of these loans are over collateralized? These are things I would like to know. And the more transparent they can be, the better. Not saying they're not being transparent, but the more the better. So these are the risks I was able to research and come up with. If I was wrong about something or didn't mention something, please comment below so everyone can see. Now let's look at the positive side. What are some good reasons to trust BlockFi? There are some good ones. So the first is the over collateralized loans. I like that. This is a big one. If BlockFi is doing this for all of their loans, it's a good sign and just lowers the risk dramatically if they're doing all this properly. Another good thing is if the price of the collateral drops significantly, BlockFi just sends the borrower a margin call and tells them, hey, you need to put up some more collateral here or we're going to take this. So unfortunately, I don't know if there's a way to 100% verify who these borrowers are and the exact numbers behind the scenes, but overall, the idea of over collateralized loans sounds good for managing risk. The next bullet I have here is Black Thursday performance. So according to Wikipedia, March 12, 2020 was the greatest single day fall since the 1987 stock market crash. So obviously BlockFi hasn't been around for decades, so they have a short track record, and at least surviving this crash in 2020 was a good test for the company. Sure, you all remember it. It was a very significant crash, and like mentioned earlier, if BlockFi was overextended or taking on too much risks, that could have been a bad scenario for them. So it's good they have something on their track record like that up. Next reason BlockFi might be trustworthy is because they are a very well-funded company backed by really big names. So they've raised at least $350 million so far. So having deep pockets and access to capital is obviously good. And this funding came from some of the biggest names out there like Morgan Creek, Coinbase Ventures, Galaxy Digital, and many more, who are also putting a bit of their reputations on the line, I guess. So if anything goes potentially wrong and they need money instantly, they have all these VCs in their back pocket. So I like how they could just raise money on a dime, and it adds some legitimacy being associated with these companies. Next, they are regulated and licensed, operating in the United States. So you can see all the licenses on their website. This is good because BlockFi is not in some random country where there may be less laws and regulations, who knows. So I like how they're operating in the USA, where there's tons of structure and legal procedures, and overall just more consequences if you try to run away compared to maybe another country. Lastly, they have a cold storage policy. So BlockFi says they store clients' funds on Gemini's cold storage. Gemini's a big name in the space. They have $20 billion under custody, something like that, and many other institutional clients use them like Wealthsimple, 3iQ, and more. There's also this article I found. BlockFi also says they do like extensive background checks when hiring employees. They give their employees cybersecurity training. They put a tight lid on access, so making sure all the company equipment is secure. It says they also plan for disaster event scenarios and more. You can check out this article if you like. So that's what BlockFi has going for them. Over collateralized loans, they have automated margin calls. They survived the 2020 market crash. They're backed by huge names, access to capital, regulated, licensed, all these security precautions. So that's what they have going for them. Now let's sum up everything in this video and look at the main pros and cons of BlockFi. So the pros, obviously we have passive income on your crypto. You can put your crypto to work and earn anywhere from 4% to 9.2% on your crypto depending on the coin. That's the numbers at the time of this recording. This money will be deposited into your account at the beginning of every month, which is even better. You earn more money than if it were deposited once a year, for example. The next pro is BlockFi is super simple to get started and relatively beginner friendly. When you sign up for your account, you have to go through a verification process. So you'll need to give them personal info. This is normal when you're signing up to like exchanges. But once your account is set up, after a few minutes, all you have to do is just deposit your crypto and you sit back and let the income roll in. Super easy. The first few days, I just kept checking my interest and seeing how much I've accumulated. So very easy to get started and you start getting interest immediately. I really like that. BlockFi also has no account minimums. So whatever you want to deposit, you can do that and you'll earn interest on that. There's no minimums. This is also good for like small and big portfolios. You decide exactly how much risk you want to take on by trying the BlockFi platform. Next is BlockFi has no lockups required. It's not like you have to keep your funds in there for a fixed amount of time. Sometimes when you're using other platforms or when you're staking other coins, you have to lock up your crypto for 7 days, 30 days, or much longer in some cases. So BlockFi, there's no commitments. It's very flexible. Next, BlockFi has a good reputation. Now this is relative to the crypto industry, which is very new. So BlockFi doesn't have that 50-year track record, but for the crypto space, they have a good reputation relative to that. They're one of the top brands right now in this category. They've also been tested through a market crash. They're backed by big names. They have access to capital. They're regulated. So far, it seems like they're doing everything right. So that's another good pro. Now, looking at the cons, there are just as many. So first, BlockFi is a centralized company. So just by default, it's not going to be as safe as your hardware wallet. As we discussed in the video, there's all these risks that come with trusting a centralized company. Bankruptcy, cyber attacks, BlockFi locking you out of your account, whatever the reason is, it's centralized, that's a con. Next is BlockFi has slow withdrawals. Now they made it very easy to deposit money, but I think they've purposely made it harder to withdraw. Like maybe for security or risk mitigation, whatever it is, it's a little harder to withdraw your money. You have to be fully verified and the process can take like 1 day or 2 business days, maybe longer. There's no issues. You get 1 free crypto withdrawal per month and there's no issues with actually withdrawing. You can do it. It's just an extra step here and there, so keep that in mind. Another con is BlockFi doesn't have every coin. At the time of this video, they have 10 coins and some of them are stable coins. So if there's certain coins you want to use, it might not have everything you want. BlockFi also doesn't have the highest interest rates for everything. Some places will offer you higher interest. Now you have to make sure those places are legit, but it's another thing to consider. There's lots of products in crypto, BlockFi competitors, there's DeFi platforms, staking. There's a lot of options. So you can maybe find products that are better than BlockFi for your specific needs. I'm definitely trying to learn more about this. There's so many products and so much to learn. Another con is you need a lot of money to make money. If you have just a few $100, you know, the interest percentage is still good, but it's only going to move the needle if you have a lot of money realistically, right? So that being said, you're still getting that percent interest rate, which is good, but if you want to move the needle, you need a lot of money. Hey guys, I have to record this again. Something happened to my video file, but lastly, I would say I'd like BlockFi to be more transparent. In my opinion, they're doing a great job so far with the product and marketing, but you know, the more transparent you can be, the better and safer I feel. It's not that they're not being transparent, but we don't know what companies and institutions they're lending to. We don't see everything behind the scenes because it is a centralized private company. So that's just another con for me that I have to factor in. And finally, those are the main pros and cons that I found. If there's anything I'm missing or got wrong or whatever, just please leave a comment so everyone can see it. In conclusion, ultimately, BlockFi will not be for everyone. For some, it's going to be on that too risky side. For others, that interest rate will be worth it and you'll put a small amount of your portfolio in there. Hopefully this video helped you think about it. I personally use it for a small percentage of my portfolio. It's a small amount that if it disappeared, it wouldn't change my life. So find out what works for you, whether it's 0%, more than 0%. But overall, I don't think anyone would advise putting 100% of your portfolio into BlockFi. It's too early for that, probably too risky. I think that's a bad idea. For me, I just like that they're well funded, they're backed by big names, they're based in the States, and all the other things I mentioned. But even then, I'm still cautious. I'm not putting everything I have into it. If you want to use BlockFi, use my link below and you'll get a juicy sign up bonus. If you don't use BlockFi, that's fine too. Drop a like if it was helpful and I'll see you in the next one.